Well, hello. I'm Chris McAlpin, the Chief Experience Officer at Sound Financial, and I hope that you're doing well today. Listen, we're going to answer the question of just simply what are the different types of real estate investments? And this is a great question. If you are asking this, you're most likely fall into a couple of different camps. Number one, you're a long-term real estate investor. You already know the answer to these questions, and you're just watching this video to clarify what you already know. Or number two, you are just embarking on your real estate investing journey and you want to learn more. So, welcome. I'm glad you're here. I'm glad you're diving into education. Or number three, you're trying to test the waters out without spending any money. You want to do your homework. You want to make sure that you're learning what you need to learn before you go diving in with a big down payment somewhere and a big bank note. And so this video is meant to be short, it's meant to be sweet, it's meant to be high level, but it's meant to be direct and answer this question as thoroughly as possible. And so for each real estate investment or each type of real estate investment, there are four basic types. And in each one of them, I'm going to unpack them a little bit. But here are the four. Here's how I look at these four. Number one, you have residential real estate. Number two, you have commercial real estate. Number three, you have raw land. Number four, you have a real estate investment trust or a fund another financial asset that holds real estate. We'll get to that last. Residential real estate. This is real property that provides housing. It's pretty simple. Residential, it provides housing. Now, there's some debate of where multifamily housing goes, but I believe that it falls here. And so this includes single family housing and multifamily housing, like apartments, duplexes, triplexes, etc. The different types here are new construction, long-term rental, buying and selling, also known as flipping, and or long-term in vacation rental. You know, you want that home on the beach or in the mountains, you buy it, you stay there a couple of weeks out of the year, you rent it the rest of the time. It's a pretty good idea. I like that one personally. What are the advantages? There's a low barrier to entry. It is easy to start a residential real estate portfolio. You go to the bank, you convince them to lend you the money, and if you got good collateral, they will. Historically, they like this lending because people pay their rent because they want to stay in the house, and you pay the bank because you want to own the property. And long term, the asset value grows nicely. It's very historically elegant. And so, but there are disadvantages. All right, rent and asset growth are lower when compared to commercial real estate. But you know, comparison is the thief of joy. So be careful with comparison, but it is lower. And number two, rental income can be greatly affected by the economy. I got stuck with one years ago. You just got to know this going in. The cash flow on residential real estate investing is far from recession proof. But let's go to commercial real estate. These are office complexes, everything from strip centers to high rises. These are hospitality, the hotel. This is rental. Again, everything from strip centers to malls. Some say multifamily housing falls into this category, but to me, that does make more sense in residential. Storage facilities, warehousing facilities, or just to name a few of the different types of commercial real estate. Everything out there that has a business in it, that's commercial real estate. But what are the types of investments? Again, new construction and long-term ownership. You're always, if you own commercial real estate, you're always leasing it to someone else to earn a profit. What are the advantages? High rents. The leases are high. The leases are long-term, and they're punitive if you get out of them typically. Long-term wealth accumulation, strong advantage. The possibility of a unique business advantage. The bank also becomes your partner, not just your lender, not just your creditor. But there are disadvantages. This is a high barrier to entry space. You must already have money to get into this space. Now, don't let that discourage you. Just build into it. If this is a space that interests you, maybe you build, and I know plenty of investors that started this. They started with residential and they grew into commercial. You know, with commercial, you typically don't get the phone call at 2 o'clock in the morning that your pipes have backed up. You have people to go handle this. which you can have people to go handle that in residential space as well. But you got to know that when generational changes happen in commercial investment space, big changes happen. So the COVID global pandemic takes place, supply chains around the world are disrupted, and we live in a country that wants to make sure, the corporations in our country want to make sure that we don't get stuck shorthanded with our just-in-time supply chain processes. So warehouse space has exploded and storage space has exploded around the country, becoming a very valuable commercial real estate investment. However, office space has changed drastically. Downtowns of major cities across the country have epidemically high vacancy rates in the high-rise office buildings. So when economic changes happen, they're slow, but they make generational moves. Just beware. Number 3, raw land. The third type of real estate investment in this quick video here is raw land. This is farming. This is timber, different types of generational assets that have to do with dirt. I think of the old saying, I've heard plenty of investors say this: I'm not greedy. I just want all the land that touches mine. Let that sink in. And as land investors typically purchase land, they have 2 ideas: a long-term growth strategy. There's this long-term exit strategy with this short-term income strategy. And quite frankly, if the short-term income strategy pays the note, they're good. Typically, that's kind of the idea there. So the long-term growth possibilities, future development as cities and highways grow outwardly, buying land outside of those city limits and letting the city grow into it. Infrastructure development of neighborhoods and commercial space. Different types of zoning areas, whether that be medical or retail or industrial space, and buying land specifically to turn it into a retail park, an industrial park, hospitality area, or medical area. You can buy the raw land to shape into future ideas while having a short-term income possibilities of farming, hunting, timber growth. Timber growth can fall into short-term and long-term categories. What are the advantages? Bank lending and long-term profits are historically strong. What are the disadvantages? Well, you better know what you're doing. If you don't know what you're doing, you're going to end up owning a tract of mud that you cannot give away. So buyer beware. Make sure that you've got a good plan and you learn your craft in this space. Now, one of the advantages or one of the disadvantages of all real estate is you can run into seasons in the economy that can last months to years of not having a readily available market to sell your property. I've known investors that got stuck at selling their property at fire sale prices because they had to get rid of it. But this last category seeks to insulate you from that. It does not always do so, but it seeks to. Real estate investment trusts and other financial assets like funds. Real estate itself is a real asset. And when you purchase or you buy a unit in a trust, or the trust or the fund buys that asset and you purchase a unit in that trust or fund, you now own a financial or paper representation of the real asset. So you think of REITs, mutual funds, LLPs, and other exotic assets that are financial assets. Now, what are the advantages? Okay, for the everyday investor, that's a low barrier to entry. You can purchase different types of trusts or funds. I know plenty of these companies that sell these of all types of real estate assets. You have typically an easy exit strategy, okay, but there's subject to rules of the trust and the fund. There's also different types of tax insulation or exchanges within these financial assets that are funds, where you capture the profit and the growth of the real estate, and maybe you can transfer that asset to another like kind of asset, insulating yourself from taxes for a period of time. But there's some disadvantages to this. The profits are not as high as owning the real asset. The funds have sticky rules about selling the positions. Quite frankly, a lot of real estate investors just like real estate. If it's raw land, they like the dirt. If it's construction, they like the building. If it's residential, they like the management. If it's commercial, they like the business aspect. And a trust or a fund does not give you that enjoyment, quite frankly. It's not as cool, I guess you'd say. But it is an excellent long-term investment, or it could be an excellent long-term investment in your portfolio. There's so much to teach in real estate, but what's the one thing I want you to remember? The real estate investments, they can be very valuable, but do your homework. Wow, I know a lot of investors that have done great work in this space, but make a long-term plan. Don't be afraid to make mistakes, but manage your risk. And you just got to dive in at some point. So good luck. Take care. Talk to you soon.